Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back, John.
Jim, it's a pleasure to be back.
John, NioBay released a resource update last week. Does it change anything?
It doesn't really change that much. This is for the James Bay niobium project in northern Ontario. The new resource estimate incorporates the drilling that they did earlier this year that they had to struggle with social license issues for 3 years before they finally had that overcome. The resource boost is 14% for indicated and 37% for the inferred, to a total of about 63 million tons between 0.52 and 0.53% niobium pentoxide. Now, the reason I say this is not such a big deal is because the company is looking at a 6,000 ton per day processing facility. Originally, they were talking only about underground mining. Now they are talking about also doing part underground, part open pit mining. I was a bit surprised by that. The really critical milestone will be the PEA that tells the market what is the cost of mining this niobium at the different scales so that we can see what is the upside for this project. Now, I think the reason that they are including open pit mining scenarios, even though this is in the sort of a wetlands area not that far from Moosonee, the Moose Cree First Nation town, is that they really want to be able to include Moosonee people as part of the workforce. And I have a suspicion that most people would rather drive big trucks in an open pit than be underground hammering away on some rock face and hauling out ore through those little carts. So I think they are including this in order to give the local stakeholders a choice in which mining scenario. It would have to be balanced with any sort of environmental impact that open pit mining would do. At 6,000 tons per day, this is not like one of those giant 100,000 ton per day open pit copper mines. So it is not a huge footprint of disturbance. But with environmental issues in a very watery wetlands region, it's always questionable whether or not an open pit mine will be improved. Now, what I was looking for in this news release but did not see was a table showing the resource at different cutoffs. And I wanted to see what the resource is at the higher cutoffs, because the scenario that I've modeled, in which they originally indicated, is that of 6,000 tons underground, and that would be a 40 million ton resource. And I was hoping to see somehow a higher grade, something like, say, 0.6% rather than 0.53%, because I had done a model earlier which showed what this could be worth if we use $19 a pound ferroniobium, and I came up with the staggering number of $21, $22 if NioBay managed to not have any further dilution from equity financing. But after these numbers came out and I saw, okay, we're probably stuck with 0.53%, I reran the model at 0.53%, and I dropped it to the current spot price, which is about $16.50 per pound. And I was surprised. I still came out with a substantial valuation that gives us a future $13 target. Now, when I talk a number like that, that's when the feasibility study is done and a permit is in hand. That's what the project is worth when you've gone all the way through the feasibility demonstration cycle. There's still a lot of work to be done here. The resource estimator recommended another 9,000 meters of drilling on this project to increase the resource category to pre-feasibility study, which would be the next stage. And doing this next sort of $10 million plus to get from beyond PEA to PFS, that's the major next stage for this project. Incidentally, I've also done an outcome visualization within the Share Collective, which is an online platform that allows individuals to do one on their own and share it into public space. I'll have that link available in my Kaiser blog later today when we publish this interview, so that people can take a look at the numbers themselves and make up their own mind and perhaps model their own scenario as to what the PEA might look like when it comes out they're thinking maybe September, and what kind of upside that potentially offers for the stock, which is currently in the 55 to 60 cents range. I think it should be more in the sort of 70 to $1.40 range, but that's largely because the market doesn't really know how to quantify a future niobium mine.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, last week, you talked about the awakening of a resource junior bull market. In past Discovery Watch episodes, you've talked about Opus One as a canary with regard to Osisko's Windfall Gold project and whose vicinity Opus has a property. Why has this comatose canary come back to life?
Well, just to provide background, a couple of years ago when Osisko Mining went to work on the Windfall project. This was an existing deposit of about 2.5 million ounces that had been around forever. Osisko ended up acquiring the company that had it, and they went to work with a rethink of this system as not just this pitiful, erratic, high-grade system, but as a misunderstood Timmins-style orogenic vein system. And they've put over $200 million into it since then, and they've got the ounces up to over 6 million ounces. And it has been a success. The company has a $700 million or so valuation, but it was pretty much a brute force exercise. There were a whole bunch of companies that picked up land in the vicinity, and they initially piggybacked on Osisko. Opus One had something called the Fecteau project, which was to the east. It was surrounded by Osisko staking, but what the market was wondering is this going to turn into an area play because Windfall is now something new and different? Well, it never did. Opus did some work on Fecteau, but it has yet to demonstrate that there's something substantial there. And that whole general area and that urban Windfall area has somewhat subsided interest, and poor Opus dropped back down to 3-4 cents where it's been limping along. But last year, they picked up a new project called Noyelle, which their consulting geologist, Pierre O'Dowd, he'd worked on it years ago. It had been owned by a junior, which merely used it as a stepping stone to get onto something bigger and better in Africa. And so the work he was on, it was interrupted, and eventually the company reverted back to the owner. And Opus One optioned it. It's in the Casa Berardi break. It's to the east of the Vesa mine, which is a small underground mine that seems to have run out of ore. Opus One also owns nearby Vesa North and Vesa Extension projects, all in that Casa Berardi break. And this Casa Berardi break is starting to get a lot of interest because we've seen the corridor to the north, the Detour corridor, get a lot of interest with the Fenelon discovery. And Casa Berardi is also getting a lot of revisit. So this company said, okay, we'll scrape together enough money, $300,000-$400,000 flow through. It's all swamp in this area, can only be drilled in winter. They got their program started. 2 holes into it, the Quebec government pulled the plug on all exploration activity, and they had to shut it down. They did get an IP survey done, extending it to the east. And a week ago, they finally reported the results for the first 2 holes. they do deepen the structure. They show that the structure's robust. They got the sort of banded iron formation, gold intersections that they're looking for. But of course, they can't do anything at the moment. The stock jumped up to 7-8 cents. Now they have to go to work to attract audiences for in January when they go back in there and can start drilling this off hopefully in a systematic manner without interruption. The IP survey did show that the system extends several kilometers to the east. It jogs a bit to the north, and it also revealed something unexpected in the southeast corner, which they don't know yet what to make of, but it's a chargeability high that they will have to investigate further. So even though they couldn't get the whole program done, they managed to get enough. And because this is a rethink of a system that was never really fully explored, this is the kind of story that this awakening bull market is interested in. But their issue is the market wants you to start drilling right now. Get to it. Show us that this is bigger and better than the previous operators assumed. And they won't be able to do that. So they'll go back to that Fecto project in the urban windfall area and do some work there and see if they can generate a target there to at least get a geological hole done to get the market paying attention between now and January when they hope to be properly financed and ready to go back to the Noyelle project.
We'll have more with John Kaiser right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Wolfden has been inching higher since they started a drill program at Picket Mountain a week ago. What's the story there?
Wolfden Resources Corp has a polymetallic zinc, lead, copper, silver, gold deposit in Maine, and they picked that up in 2018. They've upgraded the resource estimate. They have 4 million tons there. That's sort of $475 rock. I've done an outcome visualization where I imagine there's a 1,000 ton per day underground mine going to be there, and I end up coming up with an NPV of about 150 million US, which translates into a relatively modest stock price target of about $1.29 or so. That's not super exciting because that means they need to dilute further to complete a feasibility study to put this into production. And they also intend to produce a PEA sometime here in the third quarter, maybe late July, early August. And their goal isn't really to impress the market that, oh yeah, we've got this great asset that should be into production. No, they want to show the market that they have the beginnings of something potentially much bigger. They had to do the number crunching as part of a land use rezoning application from logging to industrial use. This is required in Maine before you can apply for a mining permit. And so they did all that work, submitted that in January. Hopefully in the first quarter of 2021, they get the green light for this. And in the worst case scenario, if the existing resource is all they have, well, this will be what the upside for this project is. But the drilling campaign that they started a week and a half ago, this is 5,000 meters. It's permitted. They've got everybody there. They've got a new drill contractor. There's very little COVID-19 in Maine, if any at all. It's in a rural location where it's mainly logging that gets done. So it's unlikely that there's going to be any COVID-19 problems interfering with the exploration work. And they are tackling multiple targets with this campaign because the goal is to get up to 10 million tons so that you can support a 2,000 ton per day underground mine. And 2,000 ton per day with 10 million tons, that gives you a 10-year mine life. You're never going to get a mine less than 10 years approved anywhere in a place like this because all the local community stakeholders, if there's going to be jobs in that, they want them to last more than sort of 4 or 5 years. So by getting it up to 2,000 tons per day, they end up with a significantly more robust operation. And when I did the numbers, adjusted what I think will be the costs, the capital costs and the operating costs, a 10 million ton deposit of similar grades, that makes a huge difference to the upside. That comes in at $450 million US, and that translates into a future 4 to 4.25 stock price. Now, if you assume that to find all that and drill it off and deliver a feasibility study, you're going to have to, spend another $20 million bucks or so. Well, you can assume that there's going to be twice as much stock out before all this is said and done, unless the initial exploration results are so spectacular. We go into S-curve territory. Market starts thinking that there's a Buchan Cyst district emerging here, which was 16 million tons of higher grade, world class in Newfoundland, and the same sort of regional trend of rocks. And it's this potential upside, knock it back 50%, $2 from say 18, 19 cents to $2. That's a 10-bagger. That's the kind of returns that you look for with discovery exploration. So I've done these outcome visualizations for my subscribers using the Kaiser Research online system, but I've also done them through the Share Collective, where I will also have links available for the public to look at them and see, okay, here's the cost assumptions for a base metal mine with silver gold credits at this scale and at that scale. And it's all about quantifying the size of the prize. If the company is successful, how much money would I as a shareholder make? And that's different from just being a momentum chaser, hoping that the trend that's in place continues and you end up making more money along the road. I've also done a sort of pretty long interview, Zoom-type presentation with Ron Little and their exploration VP, Don Dudek, where we explore a lot of the more complicated aspects of this project. That'll be online eventually. But one of the things that came out from this was that several of the targets which are to the east of the east-west lens, where we already have this resource, the soil geochem is pretty dead. And yet the geophysics they did last year revealed conductors, and these conductors, when you look at their spatial distribution, together they represent the potential, 15 to 20 million ton footprint. So the optimism is now growing in the market that when they go in there and start drilling into these areas where Getty Resources did not drill because they didn't have the geochem to guide them, and the reason there's no geochem is that the glacial overburden in that area is thicker, so whatever might be outcropping at bedrock isn't really available from doing a soil sampling program. And another thing that came out is they have one slide in the presentation where they talk about flying a geophysical survey on a 30 by 10 kilometer grid. Well, the property is only, target area is only like 4 and 4 by 5 kilometers. And, but you can fly land that you don't own. So they did this, and I found out that they're now negotiating with the landholders in the area, and in this area they own both surface and subsurface rights, just as was the case with Picket Mountain itself. It's mainly logging companies that own that. So if they are successful in negotiating reasonable deals in the next while, this play goes beyond just to rethink the old Picket Mountain system, but to do a proper regional exploration pass on a substantial 10 by 30 kilometer area where there are multiple Buchan district potential target areas and never been really properly explored. With the new mining code in place, there's now fresh reason to look at this area. and see if there are more of these VMS clusters. If this all unfolds, as I think, Wolfden Resources Corp will end up being valued substantially higher by the market. It's currently being punished because it's perceived as a base metal mine, but it is kind of like a high-grade gold mine. When you're dealing with $400 to $500 rock value, I mean, that's the reason Kinross came on board early last year. They made a ton of money on the Buckhorn underground gold project after they finally gave up trying to permit an open pit mine in northeastern Washington. And they saw this and said, well, we don't care that it's zinc, lead, and copper that are driving this. We're interested in high-grade underground mining, and they're not here for the 1,000-ton per day scenario. They're here for the 2,000-ton per day scenario where you get the resource to 10 million and beyond. And so this company has got everything going for it. It's financed by selling the timber rights earlier this year, so it didn't have to dilute in the garbage can price they were at, 8-9 cents at the end of last year. So everything looking up for discoveries on multiple fronts for this little junior in 2020.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.